In Nigeria, if you wanted to buy a home, you either pay in cash or you borrow from a family or a cooperative or perhaps inherit that property. In Canada, it is all about mortgage, and unless you have some cash. But most people don't understand what they are signing before they do that. So today, I'm going to be revealing what the banks don't tell you. Talking about how mortgage actually works in Canada and how to avoid costly mistakes. Hello, I am Kemi Raji, your Windsor insider and a real estate agent here in Windsor, and I help newcomers like you to avoid stress and unpleasant surprises when buying your first home in Canada. In this episode, we are talking about the truth behind mortgage pre-approvals, interest rate, and what to know before you sign those papers. So that way, you are not signing your life away. First, pre-qualification versus pre-approval. Pre-qualification is a rough estimate. It is not a promise, whereas a pre-approval means a lender has looked at your documents and conditionally approve you. Talk about a certificate to take with you when the house hunting. Don't go house hunting just because you have a pre-qualification. Sellers won't take you seriously. And it means nothing anyway. Fixed and variable rates. What are the risks? Fixed rates, the interest stays the same for 1 to 5 years. Variable rates, on the other hand, fluctuates based on the market. It could be lower upfront, but it is with higher risks. What banks don't say is that if the rate goes up, your payment can suddenly increase as well. Many newcomers choose fixed rates for stability, even if it's slightly higher in rate. You might not get the full amount you want. Some lenders look at your income, your credit score, and even the type of job you have. If you're self-employed, new to your job, or have a foreign income, it means more document and less approval. You might qualify for less than you expected, or only with alternative lenders who charge higher interest. There is a real cost, which is not just the rate. Mortgage interests add up really fast. For instance, if you have a mortgage of $450,000 at 5%, that is $105,000 in interest in 5 years. Plus, some lenders charge penalty fee if you sell or refinance early. So here's what I'm going to suggest to you. Ask about your prepayment limit, your portability, that's if you move, and then your mortgage insurance costs. All this adds up. What does it look like for Canada and Nigeria? In Canada, there's formal lending, and in Nigeria, there's sometimes informal. In Nigeria, mortgages are kind of like slowly getting in. But in Canada, mortgages are common, but they are complex. The mistake is thinking that the bank is your advisor. No, they're not. They are the seller. Your job is to understand the terms, or you work with a mortgage broker who explain them clearly to you. So when you're going to the bank or to a lender, don't just ask what the monthly payment is. Also ask them, how much will it cost you over a period of 5 years? That is how you avoid being house poor. If you need help in understanding what your mortgage options are, connect with your mortgage specialist today and they will be able to help you. Or perhaps you can book a one-on-one call with me and I'll walk you through it and connect you with a trusted broker. If you're looking to buy in Windsor-Essex County, don't hesitate to reach out to me. I help people like you who are newcomers and first-time home buyers in Canada to buy and sell stress-free. Connect with me today.